myself Vaibhav. I welcome all of you to today's session of Visual JForex, in which we will talk about the Hull Moving Average, the HMA. This is a part of the ongoing moving average series, in which we have seen a couple of different types of moving averages in last few trading session, and today we will see how we can use the Hull Moving Average to design and implement a profitable algorithm. We will see its brief description and its utility, the functions. If we see this short description, this is an extremely fast and smooth moving average, and it eliminates the lag to a large extent, and also it manages to give us a smooth curve. So that is the utility of this Hull moving average. And if we were to look into its mathematical formula, it's a bit of complex, and if you want how it is calculated, then you will have to do a bit of googling, and if you search you will find it. We are not really going into the calculation as for us. That will be done by our strategy. So mostly in today's session we will focus on its functions and the ways in which it can help us in designing an algorithm. So these are three starts point provided in the Visual JForex platform, developed by the Dukascopy Bank SA. And from this list of moving averages you can take out these different moving averages, and today is the turn of Hull moving average. In subsequent sessions we will take these moving averages one by one. Now let's consider the use of HMA. So this is the HMA block, and start point can be any of these or all of these: the on candle, on tick, or the trade event. Here you will also get a brief description of the Hull moving average. Now when it comes to customizing the moving average as per our need, we have to think about its different input parameters, the default instrument on which we want to choose our algorithmic strategy. So we have to first define this. If it is Euro USD, then you don't need to change, and Euro USD is the instrument of choice, the default instrument for the platform, but you can change it anytime. So let us for example take USD JPY in today's session. So all you have to do is change this default instrument start value, and you will have the different pair of the instrument. It can be currency or the CFD. Now coming to the time frame, the time period, here default is of 10 minutes, but you can change it. Let us also plot these on the chart so that we can better understand this indicator. To add it on the chart, you can do a quick search HMA. Okay, so we got this Hull moving average. So this is the Hull moving average which has been plotted on the hourly time frame. So let us change the blocks time frame to hourly as well. So here is the hourly time frame, and shift is the look back period, the amount of time or the point of time at which you want to take the value. If the shift is defined at 0, then it means you are looking at the current value of the HMA. If the shift is 5, then you will be going back in time 5 candle periods. So that's how the shift, which represents the look back period, works. So you can design any look back period by simply putting in the number. Suppose if you want to go back and get the value 10 hours back, then all you have to do is write 10 in the shift variable, and you will get that look back period, and the algorithm will be considering the value 10 hours back. So suppose if we put shift 10, then we will be looking back at 22 GMT of 27th July. So the value would be 105.39 at that point in time for the HMA, and then this value can be put in the algorithm to do the necessary calculation, or to devise any parameter, the criterion to go for a fresh trade, or to act as a logical parameter. Next is the time period on which the HMA is going to be defined. Here the default value is 14, but let us change this to 30 to see how the change in the time period value changes the charting and its impact on chart, and then how we can best use this indicator for our purpose of finding profitable trades. So this is how the 30 HMA will look like. Now you can see that it's more smoother than what we were seeing when it was defined on the 14 time periods. So here the candles time period will be taken into account now that this chart is hourly, and we have defined the time period at hourly here. That's why it is going to be calculated hourly for 30 hours data. Suppose if we take a different value, then it will be calculated differently. So this stands for candle periods. So and this is the amount of each candle period. So that's how it works. Now to define an algorithmic strategy on the HMA, you can utilize this as a you can say that it will help you find the direction of the momentum. Suppose if the values are falling, you can put in a couple of blocks of HMA with different look back periods, and then you can do the comparison, and that way you will get an idea. If the values are falling, that means the tendency is on the bearish side. If the values are rising, that means the tendency is on the bullish side. And also to make sense of changes, the turnaround in the USD JPY, this price action. You can also use the closing levels of hourly candle. If it is below that, that means the momentum is strong, and if the closing is above that, that means it is having a bullish tendency. The underlying momentum is now likely to shift the bullish side. Of course, we have to use couple parameters at the same time. Merely saying merely comparing the closing levels won't do. So we have to devise a combination which will best serve our purpose. But since, as I said, this HMA has a very smooth interface, and here the chart is plotted very smoothly whenever there is a price change or there is a momentum change. You get a fairly reliable idea of where the price momentum is shifting, and that's why this HMA is used widely while designing any algorithm or even trading manually. And as we have already discussed, it is fast. It will try to stay close to the price action to the possible extent, and because of that we will have the idea of change in momentum really fast, and that's going to be a plus point while using this HMA indicator. And we can also define multiple HMAs of say different time periods, and you can also use a crossover kind of strategy, and also you can do the comparison. So we can go it in multiple ways, and we can then put that algorithmic setup to work on the Dukascopy Bank's remote trading platform. So that way we don't really need to sit in front of the screen all day. Rather than that, all we have to do is design a system on this Visual JForex platform, and it will continue to trade on our behalf. You will have this output value and this parameter. This variable can be put in anywhere, wherever we are defining the condition. If we are doing some calculation, then also we can use the output value. And if we are doing comparison between various variables, then also we can use this output value. And as you might be aware, of course, the values change a lot depending on which upper side it is going to be calculated, whether it's on the bid side or whether it's on the ask side. So you have to be mindful of that as well. And of course, the closing price, the applied price is also important. You can even create a band of different HMAs simply by choosing two HMA combination and using different applied price. So for example, I will show you. Yesterday's session only we had considered the EMA envelope, and this is different, but we are basically looking at the difference being created simply because the closing price is not being used. Rather, we are using the high price and low price on different two HMAs, and the HMAs will have the other parameters which will be identical, just that the applied price will be different, and that's going to make a lot of difference here. So here we have added one more HMA now. It is converged with the existing one, but as soon as we change the applied price, as you can see, now we are seeing two different HMAs. And again, if we change this applied price and we use low price, then you will have this band, and it has its utility. And personally, I prefer to trade after creating this sort of moving average formation, as on the lower side the support can be considered closer to the lower band, and that will be helping us to place some limits on the buy trades. And on the higher side, I consider the shorting opportunities closer to this, of course, as long as the price action is showing the hourly close or last candle period's close just below these HMA levels. So we can use those conditions, and these HMA band can be used that way. So this difference between these two HMAs has arisen solely because of the applied price difference, and apart from that, all the parameters are the same, and that's why it is always important that we pay attention to the different prices on which the underlying instruments value is being taken for calculating any indicator, and that makes a lot of difference in your trades, in your system. And more precise we are with these kind of settings and the combination, the better it is for our profitability in any of the situation. And the market being dynamic, the conditions keep changing all the time, and we have to keep adapting. And here you might have noticed that this band had kind of converged, and here you can see the width was pretty narrow, and at this point in time it grew really big, and that's only indicative of the volatility. So you can even use this HMA combination to figure out the underlying instruments volatility. If comparatively, if the price bands are narrow, then that means there is not much volatility. If the band width is higher, then you can also say that volatility is a lot higher, and plan your trades accordingly. So that's just some of the examples in which we can use this HMA on the Visual JForex platform to help us devise a profitable algorithm, the automated trading system. And I hope you are getting the point, and you will be able to use this with ease after doing customization and some experimentation to see which combination will serve your purpose. So that's it from my side for today's session, and I hope you will start developing the algorithm using these HMA blocks really soon. And I would like to also get some feedback on how useful, or you can say to what extent you are finding this whole setup and also the sessions kind of conducive for your own development of the algorithms. So that's it from my side for today's session. We will be back tomorrow in today's session with a new indicator, and it will be of moving average type only, as we are doing moving averages in next few sessions. So stay tuned for more. See you tomorrow. Goodbye.